Hey everybody, how's it going? So today I wanted to read this very depressing article and just give some thoughts on it. It says U.S. housing prices jumped the most in more than 3 decades. U.S. home prices jumped the most in more than 30 years in April. Nationally, the S&P CoreLogic Case-Shiller Index of property values climbed 14.6% from a year earlier, according to a statement Tuesday. The biggest gain in data going back to 1988, which is the year I was born. That came after a 13.2% increase in March and was the 11th straight month that price gains accelerated. Home prices in 20 U.S. cities, meanwhile, jumped 14.9%, beating the median estimate in a survey of Bloomberg economists and was the biggest gain since 2005. April's performance was truly extraordinary. That performance, extraordinary. I like how it's kind of like they're talking about it as if it's a musical or Cirque du Soleil in front of you when the cost of the largest expense in your life goes up 14.9%. April's performance was truly extraordinary, said Craig J. Lazara, global head of index investment strategy at S&P Dow Jones Indices. We have previously suggested that the strength in the U.S. housing market is being driven in part by reaction to the COVID pandemic, as potential buyers move from urban apartments to suburban homes. April's data continue to be consistent with this hypothesis. Low mortgage rates and demand for properties in the suburbs have fueled the U.S. housing market for more than a year, with a shortage of homes to buy helping to push prices higher. Many buyers are running into issues finding properties they can afford. Sales of previously owned homes in the U.S. fell for a fourth straight month in May. Still, home prices are expected to remain elevated. Builders cite high material prices, supply shortages, and a limited number of skilled workers as ongoing challenges as they race to complete new homes. The forces that have propelled home price growth to the new highs over the past year remain in place and are offering little evidence of abating, Matthew Speakman, an economist at Zillow Group Inc., said in a statement. The number of available homes for sale remains historically small, particularly given the elevated demand for housing. So this is very interesting. And one of the things that I learned very recently that I didn't know, it's one of these things where I'm ignorant, I don't know it until I know it, which is that most measures of inflation don't include housing prices. So when they say that inflation is transitory or we don't expect more than this percentage of inflation, they're not actually including housing prices, which to me is insane. And it's a great way to cheat because this is the most expensive thing for most people. Most people don't measure how rich or broke they feel based on the cost of mouthwash, toilet paper, a sponge, paper towels, eggs at the grocery store. They measure it based on, can I afford where I live? Where I live, you have a lot of apartments that are $1,800 to $2,200, and it's not a particularly nice neighborhood where they're this expensive. And you have a lot of people that make $2,500 or $3,000 a month in take-home pay that are living in a $2,000 apartment. It's the largest expense that they have because in these neighborhoods that I live in, it's not like you have choices for $600 apartments. This is the largest expense for a lot of people. You don't pay $80,000 for a down payment on eggs. You don't pay $100,000 for a down payment on your Listerine. You pay $80,000 to $100,000 for a down payment on a house. So this is the largest expense that most people will have in their lives that eats up the largest part of their monthly budget, and it's not actually included in many of the ways that we calculate inflation, which I just learned that recently, and I'm sure to a lot of people they'll think that that's silly that I just learned that recently, but again, you don't know it until you know it. And this is something that I find interesting. So there's a bunch of reasons that houses are going up in price. The first one being record low interest rates. When you have really, really low interest rates, you have people that can afford a more expensive house if they're gauging whether they can afford something on a monthly payment. Many people don't gauge whether they can afford something based on the value of the asset or the commodity they're purchasing in contrast to their income and their net worth. Most people, and this could make a whole nother video entirely that's over an hour, look at things when they're gauging whether they can afford it by, can I make the monthly payment? And if they can make the monthly payment, they say, I can afford it. So if you have lower interest rates for the same monthly payment, you could get a more expensive home, which means that you have more people that are going to be able to bid up the cost of the houses because more people will be able to afford those homes by that metric of being able to afford it. You have the fact that there were lots of material shortages when there were the COVID shutdowns, and it takes a while for all of that stuff to get back into gear. They are citing skilled worker shortages, which is interesting. In a video that I did about a month or 2 months ago, I went in front of this little cafe in my neighborhood where they said, we're closed because there's no nobody, we can't find workers. A lot of people said, yeah, people are not interested in those low skilled, low paying jobs anymore. Whatever. If the government is providing benefits that are higher than what they would make working there, then screw it. Screw the coffee shop or whatever. Well, fine, whatever. But when it comes to skilled jobs like building homes, that's very interesting that there is an actual shortage there, and I'd be really curious what is contributing to that. And I don't necessarily think, given the salaries for doing that extended unemployment benefits would be contributing to that. Although I'm open to the fact that maybe it is. I don't know. I guess it's something to look into. The other interesting thing is people leaving the city areas to go to the suburban areas. And one thing that I don't think people realize is in neighborhoods like mine, you will often have a 700 square foot apartment where 4 or 5 or 6 people live in that 700 square foot apartment. Now, if half of those people, now because of lower interest rates, can afford to move out because their monthly payment will get them a home elsewhere and they're allowed to work from home, not only will that drive up the price of real estate across the rest of the country, not only will that eat up housing across the rest of the country, it doesn't even free up housing in New York City. Because let's face it, if you have a 700 square foot apartment, you probably shouldn't have 6 people living in it. So if you go from having 6 people living in that home to 3 people living in that home, you're not really opening up space for more people because the likelihood that they're going to, try to invite another 3 people in there is fairly low. But now you also have housing that's been eaten up in other areas of the country. And you have areas of cities, and I know I've lived in these apartments before, 10 or 12 years ago. It wasn't fun, where you have an insane concentration of people living there because the housing costs are so high in New York City that you need to live with 5 or 6 roommates when you're broke in order to be able to make ends meet and feed yourself. So even if all these people move out, you don't necessarily actually have a new vacancy in New York City. Some of these people that are moving out from New York City may be moving away from apartments where it's a 600 square foot studio and only one person lived there. But a lot of these people moving out could be people where there's a 600 square foot apartment and you have 3 or 4 or 5 people living there. Either way, I find this to be somewhat depressing. And what I've noticed here is that what people think is a decent salary might actually, if you're genuinely looking at inflation in certain areas with regard to housing prices and you just cut out everything else, I think houses make a lot more money than lots of normal people. So for instance, I know that people that live in really expensive cities may think this is not a high salary, but I think the majority of my audience would think, $1,000 a week is not a terrible income. $1,000 a week, I think a lot of, just gauging from the comment sections, I think a lot of people in my audience could make $1,000 a week work for them. So $1,000 a week is, I don't know, 50 something thousand bucks a year. If you're going to factor in the fact that taxes are going to take out from your paycheck, maybe like in the high 60s, low 70s. Now, there are houses that I remember looking at. I have these little bookmarks. It's kind of like my move away from New York dream bookmarks folder in Firefox. And some of these houses I've looked at in 2017, 18, 19, 20. 2017 was when I kind of started taking this little idea of saving up to eventually get out of here someday more seriously. And I look at it, and some of these houses have actually gone up by a rate of about $60,000 or $70,000 over those few years. So without being renovated, like the pictures of the house now look the same as the pictures of the house looked 3 to 5 years ago. And it will be $200,000 or $250,000 or $300,000 more expensive now than it was in 2017. So if you're a person that makes around $60,000 a year, even if you were saving 100% of your money, you had no expenses, you were just tossing all that money away looking to get a house, there's a good chance that the house that you wanted to buy appreciated at the same rate as your salary. And if that's the case, that means that your effective salary in terms of housing prices for a lot of people, very sadly, is zero. And if you make less than, let's say you make less than $1,000 a week, if you looked at your salary just in terms of housing prices, it's very likely that you are actually working for a negative wage, which just blows my mind. Because when I was looking at some of these places that I wanted to, just kind of maybe do an open house of or just add to my little dream list, it was really depressing to see a place that was like $340,000 sell for $500-something thousand just a few years later. Because it means even if you're making close to 6 figures, if your goal, if what you wanted to do with your money was buy a house, your effective salary was probably less than minimum wage. Let me know what you think of this in the comments down below. And also, do you think that this is something that is going to go away as people decide to move back to cities, if they decide to move back to cities, as builders start getting caught up, as lumber prices and all the prices of all the materials go down, as the home builders are able to find skilled workers to start constructing new homes and reconstructing condemned and old homes, do you think that this is something that actually is, quote, transitory, or do you think this is something where a few years from now the houses will continue to make more money, earn more money than the average person? In my YouTube comment section, let me know. That's it for today, and as always, I hope you learned something. I'll see you all in the next video.